Most investors believe that diversification means owning more assets, right? More funds, more labels. But diversification is not about quantity, it's about timing, it's about cycles, it's about regime awareness. So, and today, we are going to dismantle one of the most dangerous myths in modern investing. The US equities always win, and that global diversification is optional. Take a look at this chart in front of it. Look at it. Covers around 30 years of global equity returns by region. It tells a very different story. Each row is a calendar year from 1990 to 2024. Each column represents a major equity region. And you've got emerging markets. You've got every single one of them represents a equity region, including United States, emerging markets, Japan, United Kingdom, and Europe. And all returns are shown in US dollar terms, which is critical. The color basically, green is strong positive performance, yellow is modest transitional years, and red is drawdowns and regime stress. This is not a performance chart, it's a relative leadership map. What matters is who leads, who lags, and how often leadership rotates. The US has been dominant recently. You could see, right? Look at the US is at the 2024. It's this in 2023, right? So it's dominating. And for the past couple of years, except for 2022, the US has been leading. And emerging markets, you don't see, well, emerging markets, you see maybe 20 years ago, emerging markets was doing anything. And that's something I tell my subscribers, watch for emerging markets and talk about it all the time. And my members, most important, because I show you what I end up doing. So what this tells you is that the US has been dominant. But notice something critical. This US does not dominate continuously across decades. Look at the 90s. Emerging markets in Europe explode. Look at early 2000. US underperforms materially. Look at 2008. Global synchronized collapse. Look at 2010 to 2017. Rotation leadership shifts repeatedly. And post 2022, US regains dominance again. This listen is simple, but it's a bit uncomfortable. The U.S.'s dominance is cyclical, not structural. Every time investors assume permanence, returns disappoint. Look at the emerging markets boom, bust, repeat. Emerging markets are the most misunderstood column in this chart. Notice the pattern. Emerging markets explosive upside years, plus 40%, plus 60%, plus 70%. Look at the emerging markets that did quite well for a while. In 2010, look at the years in 2020, 2007, 2005, 66% in 1999. So usually emerging markets outperform after global recessions, during commodity cycles when dollar strength fades. Sounds familiar? They underperform during tightening cycle, during dollar dominance, and when geopolitical risk rises. Ignoring emerging markets doesn't reduce the risk, it concentrates it. Look at Japan and Europe. Japan is often dismissed as dead money. This proves the narrative's false. Japan delivers periodic leadership surges, currency-driven return cycles, strong relative performance in specific macro regime. Europe shows similar behavior. Strong in global reflation, weak during financial crises, and sensitive to energy and trade dynamics. The takeaway is this: markets don't die, they hibernate. Look at the danger in recency in the bias. Look at how many green US years clusters after 2013. So this creates a psychological trap. Investors extrapolate recent success, Capital grows into one geography and valuation expand and future returns compress. The chart suddenly warns the longer leadership persists, the closer rotation becomes. Every prior cycle ended this way. What this chart is really saying, it's a regime map. It tells us leadership rotates, correlations spike during crises. Diversification only works across cycles, not headlines. Most portfolios fail because they are diversified by label, not by behavior. So you have two choices here. Chase what worked, position for what rotates. This chart does not reward comfort, it rewards humility. Because markets don't repeat headlines, they repeat human behavior, and human behavior never learns.